Saudi Arabia has signaled that it is open to the possibility of accepting the Chinese yuan for oil sales, marking a potential shift away from the long-standing reliance on the US dollar for global oil transactions. This development could have significant implications for the global economy and the dominance of the US dollar in international trade. If Saudi Arabia, one of the world's largest oil producers, begins using the yuan, it could encourage other nations to follow suit, potentially reducing the dollar's dominance in global energy markets. Before we proceed, please like, comment, and subscribe to help us with the YouTube algorithm. The discussions about the use of the yuan have been fueled by Saudi Arabia's growing economic ties with China, which has become one of the kingdom's largest trading partners. In recent years, China has been actively promoting the use of its currency in global trade, particularly in energy markets. By accepting the yuan for oil sales, Saudi Arabia could further strengthen its relationship with China and tap into the vast opportunities that the Chinese market offers. While the US dollar has been the global reserve currency for decades, this shift signals a broader trend of diversification among major economies. Countries like China and Russia have been looking for ways to reduce their reliance on the dollar, especially as US sanctions and trade policies have raised concerns about the risks of overdependence on the dollar. By embracing the yuan, Saudi Arabia may be positioning itself to play a more active role in this global transition. However, any move to adopt the yuan for oil sales would not happen overnight. The global oil market is deeply intertwined with the US financial system, and the dollar remains the most widely used currency for international trade. For Saudi Arabia, a gradual shift to the yuan may be more practical, allowing the kingdom to test the waters without disrupting its long-standing relationships with Western economies. This development also highlights the broader geopolitical shifts taking place in the Middle East. As Saudi Arabia expands its economic partnerships with China and other countries, it is also rebalancing its relationships with traditional allies like the United States. While Saudi Arabia remains closely aligned with the US on many issues, its willingness to explore the use of the yuan signals that the kingdom is exploring new avenues for economic growth and influence. If Saudi Arabia does decide to adopt the yuan for oil sales, it could have a ripple effect across global markets. Other oil-producing nations may also consider accepting alternative currencies for their exports, further diminishing the dominance of the US dollar. This shift could have wide-ranging consequences for the global financial system and could reshape the way countries conduct international trade in the future.